Mr. Z. So the world's changed. It's still tilting that way. But that's why I think Bitcoin's right in the middle. And we pointed out this years ago when the Chinese banned it, it just pointed out to the rest of the civilized adult modern world that this has got some value. So that's the macro. But and I look at it also in the bigger picture. This is part of what I see as that pretty significant deflationary trend in things like commodities, and eventually yields, and world tilting towards recession. And I'll end with this in terms of bringing it down to the micro. The world's best leading indicator, most 24/7 fluid trading vehicle is Bitcoin, and it started to roll back down. It bottomed, it peaked at about its 200-week moving average, right about its 50-week moving average. Same with the NASDAQ.
In today's session, our guest is Bloomberg Intelligence senior commodities strategist Mike McGlone. In his recent tweet, he said cryptos may be facing their first real recession, which typically means lower asset prices and higher volatility. From early 2022 until now, the Federal Reserve has been hastily hiking interest rates to combat record-high CPI inflation in the United States. Before going further in this video, make sure to hit the subscribe button for more recent updates regarding digital assets. Ensuing global liquidity crunch has indeed reined in prices, but also ravaged the crypto market and forced industry leaders like Coinbase and Crypto.com to downsize substantially. Bitcoin's rally this month was largely spurred by a promising December CPI report, which registered annual inflation at 6.5%, down from 7.1% the previous month. Such signs show investors in both crypto and stocks that the Fed may soon be able to return to a more dovish monetary policy. As for Bitcoin, the crypto analyst believes that a pullback to the low $21,000 region is likely in order for the king crypto before it resumes its rally. Didn't get the initial break higher I was hoping for, but I still believe we'll see a bounce off the retest of the high time frame trend breakout acting as support. Just gives a bit more of an opportunity to stack. $30,000 is still a magnet. Bitcoin price has historically moved in 4-year cycles, with feverish bull runs in 1 year followed by dramatic corrections in the next alongside less active, more modest gains in the intervening year.
I like to point out, I was pointing out that PPI is right now running 9%. PPI is bottomed at minus 5% 3 times in the last decade, and I fully expect that. It's going to go to minus 5%. So this time next year, Scott, and here's indications for that. The price of the #1 measure of heat and electricity in this country, natural gas, has dropped the same price since 1990. Imagine if we said about the stock market. So that's what happens in commodities. That's what happens with that rapidly advancing technology. And natural gas is the best example. We just have an ocean of it in this country. And if we keep harnessing it, and every time prices go up, it comes out, the supply comes back out, and the demand gets crushed. So as far as inflation is concerned, my indications are expect significant deflationary forces. Remember, the Fed is still tightening. Most central banks are still tightening. The commodity market's in a bear market. It's down 25% in the last 2, I guess, since the financial crisis. The Bloomberg Commodity Index has corrected 50% twice. I think it's going to do it again. And so to me, this is all those tilting that way. And it's just the macro is one of those things I've never seen this. Well, the Fed's still tightening. Okay. Here's some facts I want to point out about that. To me, the key trigger for deflationary forces will be the stock market going down. It's just signaled by Bitcoin. It's all getting started. So and just to give you facts. You don't have to have an opinion. How about the facts of the stock market has corrected S&P 500 50% twice since the peak in 2000. And both times were during recessions, and both times the recessions were signaled during with pretty steep inverted yield curve. And the Cleveland Fed measure, which is the one I have going back the longest since 1960, is the most inverted since 1980. Okay, so we're going to get a recession. If people say maybe it'll be mild, I think it's going to be severe. Things are going to go down, and we're going to have significant deflationary force. Now, you point out what's happening with airfares. That, to me, is classic knee-jerk reaction that goes back downward. We all know.
According to Mike McGlone, worse rising interest rates raise the possibility of a Fed-induced recession. The next CPI report is giving traders and investors even more agita than usual. Fears are running high that a hot January inflation print will force the Federal Reserve to send interest rates ever higher and keep them there for longer. After all, the S&P 500 rose more than 6% in the first month of 2023, thanks in part to expectations that the Fed would pivot away from its aggressive policy on interest rates sometime later this year. On an annual basis, economists expect core CPI rose 5.5% over the year, down modestly from the annual 5.7% in December. Talking about the movements in natural gas futures in the last week indicate a breakthrough out of the bearish sentiments as the weekly closing witnessed a pause in selling sprees and short squeezing helped to regain strength. Despite Friday's reversal, natural gas futures remain in bearish territory until they sustain above the immediate resistance at $2.658.
Sure, it has. It did. I thought last week because was it Wednesday? I think I could look at it. I was just sometimes it's part of being an ex-trader, and I don't trade anymore, but it's so cool to observe because my finger's not on the trigger of taking positions anymore, which can really make you lose your hair. And Scott, you've done that well. So, but I'm addicted to watching markets, and you just watch the nuances of flows and watch how things go. And Bitcoin, I mean, the number came as picking up around 24,000, then started ticking down. It was the first one, and it usually is. You could see it on the weekend, and then the stock market started trickling down and other things. Bond yields started going up. It was just, okay, this might be it. And then you look at, okay, so those are shorter term, but is it coming from good, solid levels with good reasons? Yeah, like some of this regulation with what happened cracked, and that makes sense. And the other stuff we're seeing happen is just classic Warren Buffett. The tide's gone out, and we see he's not wearing clothes, and there's still so much adult supervision needed in cryptos. Yes, I know people complain about regulation. I get it. I'm sorry, but people like Sam Bankman-Fried prove that young people playing video games should not be running corporations and taking your money and giving it away to their parents to buy homes and things. It's just, and to politicians, that's just the lessons we're learning of when you put your money with a trusted fiduciary or an exchange, you want to be able to trust that exchange, or with an ETF. That's where I push back in regulation. They should be approving ETFs in Bitcoin so people wouldn't have to put their money in exchanges like FTX. But to me, that's what's happening. I think and you see some of the headlines today, Binance Coin having issues. This is just classic. Tide's gone out, and the tide hasn't really gone out much on the equities for a normal indication of who's wearing clothes. For instance, credit spreads are still very narrow.
Stock futures tick lower Monday night as investors look to Tuesday's inflation data. Seems like the futures tied to the Dow Jones Industrial Average slipped 38 points or 0.1%. Meanwhile, S&P 500 future dropped 0.1%, and NASDAQ 100 futures declined 0.2%. Stocks are coming off a winning day with all three major indexes ending Monday's session up more than 1%. That marked a turn from last week when the NASDAQ Composite and S&P 500 posted their worst weekly performances since December. A reverse course from the recent months of disinflation would reignite investor concerns that high inflation and Fed rate hikes will define the markets in 2023 as they did last year. Talking about ETFs and closed-end funds are similar in that they both trade intraday on an exchange. However, while many ETFs track the performance of an index of securities, closed-end funds are actively managed. At the same time, advisors may rethink how they allocate capital in 2023 given favorable relative costs and the tax benefits of ETFs versus SMAs. According to one survey, 65% of retail investors intend to stick with their investment plans in 2023, while 29% expect to increase allocations.
U.S. has never been that stupid in the long term. In the short term, sure, we do stupid things like prohibition and stuff. And Churchill pointed it out. We'll come to the right conclusions. And that's why I always go back to the dollar and make it clear. Now, we call them stable coins. I'll call them crypto dollars. The number one traded assets, tokens of dollars in this space are crypto dollars. Now, yes, there may be 10,000 coins that really shouldn't be trading at, there's purely speculative. I've always had a problem with that. I get it. And an ex-trader, get speculation very well. You buy low or buy high, sell higher. But to me, that's the bottom line, is this is the kind of stuff you hear that hashes out proper rules and regulation. It's just not going to be easy. It's going to take a while. And that's part of, to me, what happens. This is still a bear market, and we've had a bounce in that bear market. So, but to get the institutions in, bottom line is you need to have things like proper regulation. They don't have to worry about this anymore. And then to me, what's going to just solve the whole thing is when you can push a button in an ETF and be able to buy an index.
That's not happening with Gensler. We're not getting an ETF with this regime.
But Gensler's 2 years in. He's got 2 years left, and he's getting hit down. But he's making some good points. People, if you really listen to his rationality, I mean, when you put your money with someone and they give you a return, you have to that's based on them doing something to give you that return. It's not like Bitcoin is free. But the key thing, I know it's not proper. I won't defend him, but I've worked with him a lot more than people. I'm working with Commodities a long time ago when he had CFTC, and the people at Goldman Sachs hated him. He was ex-Goldman Sachs. Guess what? It worked out. They worked out fine. The commodity index worked out fine. It'll do the same thing. I can dig in those details, but I remember that. The bottom line is he did approve the first Bitcoin ETF, which is outperforming Bitcoin on maybe a 1 year, 6 month basis because of rolling into backwardation. It's a baby step. He's got to fight that. He's fighting that battle up there, with all the incumbents and regulation. But work with them. Let's work with them as much as possible. You can't fight the SEC. You got to work with them as much as possible.
U.S. Securities and Exchange Commission Chair Gary Gensler is warning other platforms to take note of crypto exchange Kraken's move to halt its staking service in the country and cough up a $30 million fine. There's a saying in crypto that says not your keys, not your coins. So those other platforms should take note of this and seek to come into compliance, do the proper disclosures and registration, and the like. The cryptocurrency market has recorded some positive signs due to ease in macroeconomic activities, which has led the crypto price to rally. Furthermore, the rate hike decision has directly impacted the US dollar too and weakened it to a great extent, as the weak dollar has always boosted the price of cryptocurrencies. Mike McGlone observed that crypto investors should continue taking the cautious approach as any new development in this space can lead to extreme situations. What are your thoughts on Mike McGlone's discussion about Bitcoin and other commodities performance in 2023? Let us know in the comment section below. We hope you enjoyed this video, and if you did, please consider giving it a like and subscribing to our channel. Also, make sure to turn on the notifications bell so you'll be informed of our future uploads.